So I have a set of financial data here. And so we'll talk about the different types of analyses. We had vertical and horizontal. So this is the revenue. I don't know. I think this is Exxon. I think I just took the revenue. And so what I'm gonna demonstrate here is this horizontal analysis. Okay, you can see here the years are arranged horizontally, and I'd have expenses here if I did the full thing. Okay, whatever you have each year's information kind of arranged in columns. Okay, but let's say we just cared about revenue. So what you would do in a trend analysis is this is the biggest trick. Okay, the biggest decision you're going to make is picking a base year. Okay, so let's just use the oldest year, 2018, as the base year. So what you're going to do, and it's very easy to do in Excel, you can do it in one formula. Okay, you basically want to take the cell above divided by the base year. And in this case, the cell above is the base year, but I want to fix the denominator, right? So I'm just going to put F4 here. Okay, so now this formula is going to take whatever cell is above divided by J5, which is this 290,021, which is a fixed. Okay, so does everyone understand this? The numerator moves around, the denominator is a fixed cell. Okay, and right now it's just giving me 1, but let's just move this out a little bit to make it a proper kind of ratio. So now I'll just copy this cell. If I paste it here, you can see that it's taking the number above divided by this fixed cell here. Is everyone good with this formula? So now when I apply it rightwards, it's going to do this trend analysis. So if I just go like this, and I do Control R, I have my trend analysis. Okay, so you can see here that the revenue dropped a lot. I think this is Exxon. Why did the revenue for Exxon Mobil drop to 63% of what it was in 2018? What was going on in the world? COVID, right? People stopped driving. People stopped, whatever. All the stuff that requires oil and gas was drastically cut down. Okay. And then you see that it eventually picked back up, peaked in 2043, and now it's like, declined again. It's probably up now. If we looked at ExxonMobil in 2026, what is it going to be? It's going to be higher than this, right? Why? What's happened since January or December 2025? Yeah, Strait of Hormuz, exactly. I think oil prices doubled since then, right? I think it was around $70, $80. Now it's like $140 a barrel. Okay, so the revenue is gonna definitely increase because we're still consuming. Unless you would think that higher prices for oil may cause demand to go down, which definitely happened to some extent. But usually for oil and gas companies, when the price goes up, their revenues go up too, and they make a lot more profit, at least in the short term. Okay, um, so why I said that this is a tricky kind of thing is like in this horizontal analysis, we see that 2025, we're ending at a 14% increase from the base year. Does everyone agree with that? 1.14 means that the base year plus 14%. Okay. Now let's see what happens if I wanted to be a sneaky analyst at ExxonMobil to convince people our business is doing great. I could just do one simple thing to make that trend analysis look way better. What could I do? If I change the base year to 2020, so now I can say, oh, so in this case, I could say revenues are up 14% from 2018. Okay. Using the exact same numbers, but just changing the base year, I can now say revenues are up 83% from 2020. So this is a trick that is used a lot by politicians, by financial managers. Okay, if you look at a mutual fund, it'll say our 14-year return is this. Why do they pick 14 years? Why not 15? Why not 10? It's likely because some base year kind of thing that they're doing. Okay, so the trick of base year as a comparison is gameable. Okay, you need to be aware of this. This is like, don't get fooled by, all the people trying to play games with numbers and statistics and all this. Okay, this is a very common sales trick essentially. Okay, so does everyone understand this? How base year is going to affect what your analysis kind of looks like, even though the numbers are the same? That makes sense? Okay, but this type of analysis is a horizontal analysis because as you can see, the analysis is going horizontally from left to right, right to left. This is our income statement, so we can do a couple of things. We could do a horizontal analysis. The oldest year is the base year. Okay, so you can see that we have some volatility in the revenue here. Okay, it's going up and down. It's fluctuating, and this year it went up a little bit, and then this year it's down from the base year. Okay, so you could do this for all of different accounts. Okay, so you can see that total revenues is almost the same as the base year. In this case, it's a little above, and you could just again do this type of analysis for every single account here and get some information. There might be some. We can see that our revenue did go down, but our total costs are unchanged. And so if we look at our income before income tax, it is significantly lower. And then if we did this for net income, we can see that the lower revenue is translating into significantly lower profit, okay, over time. So this horizontal analysis you don't have to just do for revenue. You can do it for any of the accounts that you cared about.